Well, a little bit of weakness in the stock market last week. Does that mean the markets are going to crash again this fall? I will answer that question, do my regular weekly market analysis. We'll look at the trade of the week on QID and do a market scan in search of opportunity. All coming up in this week's Market Minute. So is the market going to crash again this fall? Historically, September is the worst month of the year for the stock market. And with the dramatic gains that we have seen, particularly in the large cap tech stocks, it would be easy to think that a crash is coming. And of course, last week on Thursday, we had a big down day, the Dow down over 800 points. And so does this telegraph further weakness in the fall? Well, I'm going to show you what to watch for. It's actually pretty simple. We want to look for breaks of upward trend lines, and they are most meaningful when we have a break from a falling top. So let's jump to the charts and take a look at exactly that concept. So here is the chart of the Nasdaq 100. And when I say breaks of upward trend lines, I mean this sort of thing that happened right there on Thursday. Now notice that this trend line, and this by the way is the 30-day, 30-minute chart, so it's pretty short term. So this chart went parabolic to the upside. See how it's curving up and away? That's a sign of emotion. We then broke down on Thursday from a slightly falling top, and that is an indication that there was weakness to come. Now that is only a very short-term indication, and that was basically telling us that we were going to get some weakness in the following few days. And of course, we had weakness on Thursday and then Friday morning before a little bounce back Friday afternoon. Now let's take that same concept and apply it to the longer term chart, the daily chart, and see if that has happened yet. So again, we are going to draw a line across the lows. That is our upward trend line. Notice what happened on Friday. We opened and moved all the way down to the trend line and bounced off of it. And that is what we expect to have happen. You can see in the past, we get these pullbacks to the trend line and then we bounce off of it. Well, this one is a little more substantial pullback because price had run up and away from the trend line much more. That run up and away from the trend line is an indication that the buyers were emotional. They were chasing stocks higher. And that usually comes before a pullback. And all week last week, I was saying, watch for the pullback. It's going to come soon. So we pulled back. We bounced off of the trend line. But at this point, we're still okay. The daily chart upward trend line has held. Now, that doesn't mean that it's going to hold next week or in 3 weeks. And if it does break the upward trend line, then we need to be worried. Now, what may happen is we may go up for a few days and make a falling top and then break that upward trend line. At that point, I want you to get defensive. So we've got an early signal of weakness, which happened on Thursday. The next thing to watch for is, do we make a falling top and then break this upward trend line, which is at about 273 on the QQQ. Now we then take that same concept and apply it to the weekly chart. So here is the weekly upward trend line, and you can see that we have held. But what's important about this chart is we hit a new high this week and we closed below the open. I call that a bursting bubble. Notice also that volume was quite high. So when you have strong volume, you hit a new high and then close below the open. That's my bursting bubble candle, and that happened last week. So that is another sign that we could see more weakness. So what we want to watch for is a break of the upward trend line on that daily chart. Hasn't happened yet, but it could happen next week, 2 weeks, 3 weeks. Let's keep an eye out for that. That will be the signal that there is more weakness to come and we may get the stock market crash again in the fall. Not ready yet, but watch closely. All right, let's get on to this week's regular market analysis, starting off with the US markets. And here you can see the short-term chart of the S&P 500. It went parabolic to the upside. We broke the upward trend. We have now fallen back to support where we bounced, to be expected. This market is not out of the woods. It had a little short-term pullback. We got a bounce. I think we could bounce a little bit more early next week. Remember, the markets are closed Monday for Labor Day. So perhaps Tuesday, Wednesday get a little bit of a bounce back. But if we make that falling top and then roll over and try to penetrate support at 338, I think we should all get a little defensive with our long positions, especially those that have gone up a lot in the recent past. Looking at the long-term chart of the S&P, there you see that bursting bubble candle as well. Hit a new high, closed below the open. Pretty strong volume, although not exceptional volume. Moving along to the Russell 2000, which is our small cap stocks. And this group of stocks hasn't gone to the upside as much as the large caps have. So we could actually see a benefit here. Money could rotate out of the large cap stocks and come into the small caps. They've been kind of ignored for the last 4 to 6 weeks or so. And so perhaps if the market simply pulls back a little bit but doesn't really break down, we could see money come out of the Teslas, the Apples, those sorts of stocks, the high flyers of the last few months, and move into some of these small cap stocks which have been ignored. Hasn't happened yet, but something to watch for. All right, continuing along, let's take a look at the Canadian markets, and we have here the Toronto Stock Exchange 30-day 60-minute chart, and you can see the falling top, the break of support. That was your signal that there was a problem coming on the Canadian market, and I do think that there is more potential weakness ahead for Canadian stocks. Looking at the weekly chart, you can see the upward trend line has been broken, and this is from a falling top. So I am fairly cautious with Canadian stocks. I do think we could see more weakness ahead in the weeks to come. Looking at the TSX Venture, the small cap or the micro cap stocks in Canada, and you can see here the triple top, 1, 2, 3, and if we then start to break through this support, we could see a breakdown further. Now, much of this is going to depend on what mining does, and we'll look at the gold chart in just a moment to see if there is a potential breakdown coming. If gold starts to break down, I think we'll see this also break down. No, there's no breakdown yet. Let's stress that. But there's a lot of things to watch for as perhaps canaries in the coal mine. When you get a triple top and then you start to test support at that 700 level, we are at the point where we could get that breakdown. All right, let's look at commodities because that's very important for those TSX venture markets and really the Canadian market. And this is the chart of gold, and you can see 1, 2, 3. Notice how they're falling tops? That means every time the buyers were strong, they pushed it up, pulled back. Next time they pushed it up, couldn't push it as high as the previous time. So the buyers are losing strength. And then it pulls back, and then again they try, and they can't push it higher. And the result is a pattern called a descending triangle. When you have descending triangles and you break down through support, that usually leads to more weakness. And so we want to watch out for that. If you are long of gold, keep an eye on that particular chart pattern, because if we start to break down, there could be more profit taking in the gold sector. Now, for now, it's okay. This is still an upward trend, and we're just taking a little breather. We could also break to the upside, and then gold continues higher. But if we break to the downside, then you have to be cautious. And we'll take a look at the oil chart. It was pretty quiet for a number of months, but started to show some weakness there. You can see volume picking up a little bit. So that's maybe a sign that investors think the global economy is not going to get better anytime soon, and that could be a motivating factor for some selling pressure in stocks, and also a reason to avoid the energy sector as long as that pattern is negative. All right, looking at the fear chart, we had a little pickup in fear this week. It actually started a few days ago. You can see the downward trend line in fear broke early this past week. And then we had, of course, with the big move to the downside on Thursday, a big move to the upside for the VXX on strong volume. So this is one of the ways to profit from a crashing market. The VXX will tend to go up if the market goes down. So if we start to get those breakdowns in the S&P 500, in the Nasdaq 100, you can go hide in something like the VXX. It presents a great trading vehicle to profit from a crash, as well as some of the inverse ETFs that are out there, like the trade of the week, which we'll talk about in just a moment. So my outlook then, I've lowered my long-term rating on US stocks to neutral for now. It could go lower if we get that breakdown. Bearish short-term, we are starting to see short-term falling tops. Canadian stocks neutral long-term, bearish short-term. Gold neutral on both time frames, but that could turn bearish on the short-term time frame if we break through that support level. And oil neutral long-term and bearish short-term. We've had a very hot tech stock market. Those large cap tech stocks have really done great, but there's some time for profit taking. And that's what began this past week. We saw it in Tesla, Nvidia, Apple. All these high-flying tech stocks have started to see profit taking, and that could lead, it could be a catalyst for a fall stock market pullback. And we want to watch for that second breakdown from a falling top as an indication that more weakness is coming. Hasn't happened yet, but let's watch closely for that. Gold remains stable, but still not an optimistic market in the near term. Sellers are starting to act in oil again, and fear is rising. All right, let's now jump to the trade of the week. And this week, normally I do a day trade of the week, but this week I thought I would do a swing trade because one of my viewers here asked me to. So here is a swing trade of the week on QID. Now, QID is one of these vehicles that will go up if the market goes down. This particular ETF is a leveraged, double leveraged ETF on the Nasdaq inverse. So if the Nasdaq goes down 1%, this should go up 2%. It tends to be a little less than that, but that's basically the idea. And so on this particular trade on QID, on Thursday, we had the all-important action candle right there on the 13-minute chart, which is what I like to use when I'm swing trading. Now, what's important is that we had broken the downward trend line on QID. We built a little rising bottom, and then we broke from the rising bottom, and that sent the QID up as the overall Nasdaq went down. It then broke its little short-term upward trend line. So as a swing trade, we buy it here, we sell it there. That was a 6.3 RR gain. I still think the QID is good longer term, but as a very short 1.5 day trade, this one was quite nice. For $100 of risk, the position size was 667 shares, which required $5,800 of capital. You can leverage this. With leverage, $1,935 of capital required. That was a $630 gain. For $1,900 of capital, that's a 32% return for a 2-day hold, basically profiting from the overall market moving lower. And hey, we can always make money somehow, even if the market is moving down. All right, let's now jump to the Stockscores Market Scan. This is the tool that we use to go look for opportunities in the overall market. We can scan through all North American markets with the market scan, looking for a variety of strategies, investor strategies, active trader strategies. All of the presets are there for the members of Stockscores to use. If you want more information on membership to Stockscores, go to the website and there's lots of information there. All right, let's jump into the market scan tool. And this week we're going to run the abnormal day up or abnormal breaks up strategy, abnormal breaks US. And this looks for stocks making gains with strong volume. I'm not too optimistic because I'm not too optimistic about the overall market short term, but you never know, we might find something. What we're looking for is abnormal strength with abnormal volume. We can see it here on BASA. It had a pretty good move to the upside on Friday. My main issue with this is that it first had its abnormal move to the upside about 2 months ago. And so to me, that was the time to buy. But it's been trading in a sideways range for a little while, got good volume, good price action, pretty low price stocks. Not everyone wants to trade 65-cent stocks. But when I see that on this time frame, I then jump to the 3-year time frame to see if there's any issues. And that is where I see an issue, because on the 3-year, I can see that there is strong resistance there at $1. If I'm buying it at 65 cents, support is at 20 cents. My reward potential up to resistance is about the same as my risk down to support. That is a 1-to-1 reward for risk potential, and that's not good enough. I want 2-to-1. So for that reason, I would pass on BASA. Now that's a simple sort of technique of risk management. I can teach anyone that. It's one of the things I teach in the investor course and in the active trader course available from stockscores.com. Let's take a look at NCMI, another stock that was actually a great day trader on Friday. Huge volume, traded 10 million shares, nice price break out of this lengthy sideways trading range. So that's a good signal that the stock wants to go higher. The question is, how much higher? it's going to run into resistance at this old trading range up in here. So from a risk-reward standpoint, if you're buying here and support is there, do you have double the upside? You have about double. So it's about 2-to-1 reward for risk potential. Not great, but pretty good. Let's just take a look at the 3-year chart to take a look at that longer term pattern. And that's sort of the scenario that I see. Yes, I think it can go up to 8. Is that enough upside for the risk? It's close. And so I'd give this a 6.5 out of 10, 65% chance of being a good trade. Continuing along, I'm just looking for that abnormal price move from low volatility. When I see that, I sort of zero in on the chart pattern, start to look at the longer term chart. Here's MMYT, was another good day trader on Friday, but coming into resistance here at about $18, $19. So I think I would pass on it for that reason as a longer term trade. Again, as a day trade, it was pretty good, but not really what we want. Now here's UNM. This pattern here is called an ascending triangle. You can see the rising bottoms towards a flat top. We talked about this last week in the chart of Coca-Cola. Coca-Cola ended up having a decent week this past. This stock hasn't quite broken out yet. It's got some volume coming into it. It's testing resistance. If this can break out here, it could start to move up toward these levels. So pretty good. I think it has a little bit of work to do still, but something to keep an eye on next week, UNM. Schnitzer Steel has been going up for a number of months, so I think it's a good hold, but not one to buy now. Continuing along, this is the process. We just cycle through the charts, looking for patterns. Can everyone see the ascending triangle in that pattern? If so, leave a comment below that you found it and why you like it or why you don't like it. I'll tell you what I think. We've got the ascending triangle, nice rising bottoms, volume coming in. What's the issue? Resistance here. So that's at about $33. So entry is there, support is here, and it's about 2-to-1 up to that resistance level again. So again, I'm doing this very quickly, but you get the idea. These simple patterns, they repeat themselves and they're quite predictive. And so I would give this one a 6.5 out of 10 as well. Well, I think I'll cut it off there and we will call it a week. It is a long weekend. Remember, the markets are closed on Monday. Please leave a comment below if you enjoyed the content. Hit that like button, and most importantly, trade well.